Hi everybody, it's time for a weekend review of Nifty. To begin with, let us see how Nifty fared last week. Well, this was Monday, a gap up. Another gap up was obtained on Tuesday, but thereafter, the next 3 days, Nifty remained sideways. In doing so, well, one can say it is making a flag to move up again, or one can also say it this way, it might be beginning of a small distribution and a correction may come up. In the course of the review, we shall try to deduct what can come up. Beginning with the trend analysis, a lot of persons have asked me earlier why I am saying that the primary trend is down. I'll just draw the lines of the recent major trend. In that case, you will understand why I am saying that the primary trend is down. The phase primary trend was coined by Charles Dow, and I have repeatedly said earlier, signal generated from primary trend is too late. So as you can see, if we make a higher high above the previous high on the basis of close, we will be saying that the primary trend has gone up. Else, if we have a move here which will be quite significant in nature, thereafter it crosses upward, we can that way also we can say that the primary trend has turned up, or it goes down under. In that case, the downtrend continues. But as of now, since we are having just a lower low and thereafter the upside has not yet crossed the previous high, the primary trend should be considered down. The intermediate term trend is up, which will turn down for itself if we have a close below 10,607. This level of 10,607 is subject to swing of the Nifty in coming days. As I have mentioned earlier, recognition of this intermediate term trend is extremely important for a trader, for once he could recognize it, thereafter long trades have always given him rewards. The short-term trend obviously can be one day up, one day down. Friday being a down day, we can say that the short term has just turned for the downside. Where can we get supports and resistances in this particular trend? The last time we mentioned of the unfilled gaps, and one of the gaps was just filled in the previous week. The next unfilled gap on the upside is at around this level, which runs from 11,536 to 11,384. Thereafter, the next unfilled gap is way up at around the 12,000 level. In the upside move here, gap ups have been observed from 10,933 to 10,953 and from 11,037 to 11,113. These levels will act as supports in coming days. Based on swing high and swing low, before coming to the major highs or major lows, I would like to point out to a small swing high which will be extremely important for this particular trend. And that high is this particular junction. And that high is at around this particular zone of 8,865 to 70 odd levels. This zone will be a crucial factor if any correction comes up in the stock. On a weekly chart, I have marked out the major swing highs and swing lows for Nifty. As you can see, these levels will be major area to watch out for in coming weeks. Every time we look at chart from some particular place, we do get some vital clues. This time, I am getting a major clue from the 200-day SMA, the black moving average being the 200-day simple moving average. You might just say, well, it is bullish, market is okay because it has crossed the 200-day SMA. I would like to take this particular breakout in a little different manner but may have the same view as yours. The breakout has taken place, but has there been any pullback to the moving average after the breakout? No. So this would be a place where I would be on a lookout for any downside which will give me a support, and there is a possibility that a small pullback to the 200-day may come up in coming days. Well, as of now, the 200-day is at around 10,883 odd levels. The best part is the 200-day moving average and the top which I was just discussing coincides and all has almost the same value. Moving over to the weekly charts, 50-week simple moving average is also placed almost at the same place, and the 100-week at around the 11,040 zone. In the previous week, I had shown you this particular downward sloping trend line and had expected the RSI to move at around 82 odd levels as per the projection. My projection here was coming to at around 82 and the indicator moved to 79.81. If you say, well, I was wrong, so be it. If you say, well, I was very much close to the projection level, so be it. But all I want to say, I gave due respect for this particular trend line, and this trend line was the key takeaway in our previous week's study. As of now, in 60-minute chart, RSI is cooling off because the price has been quite flat in nature for the last 3 odd days. Staying on with 60-minute chart of Nifty and looking at the ADX, peaks have been made well beyond the 25 odd lines. Not only that, all the peaks appear quite healthy. The interpretation stands as follows. ADX is showing dips should be bought. But when to buy, exactly where to buy, one should wait for the ADX to cool down and move up again. I have discussed an intraday trading setup in my ADX video. Plus DI is greater than minus DI. 1433 stochastics is moving up and is up in a buy mode. That exactly took place in second half of Friday. This is on Nifty 5-minute chart. Moving on to open interest interpretation, in the last 3 days, we are neither witnessing any significant rise nor any significant fall. This can be just taken as a resting period for the bulls. It may extend itself for 2 or 3 more days, but the overall trend as of now remains intact and buy on dips policy should be followed. Chasing momentum on the upside in general should be avoided in these cases. Put call ratio. 23rd of July had an exorbitantly high value of put call ratio. It was at 1.90. The last time we discussed, we felt 1.76 itself was high, but I did say even now there is room for moving upward, and it did move up to 1.9. Right now it has cooled down to 1.74 odd levels, but as I mentioned last week, I am showing you the same graph here. You may notice that the buoyancy of the put call ratio as of now appears healthy, and as long as it sustains this buoyancy, one should think of buying at dips. Coming to the conclusion, we had two major takeaways from the chart observation. The ADX on 60-minute chart is cooling off, hence we can expect a slightly dull type of a market till ADX starts moving up again. When ADX starts moving up, we may have exciting moves of this type or this type. But since ADX is coming down, the move can be of this type. Well, this is one of them. The other one was absolute flattish, and here we had more or less in a same range but slightly volatile. Trending move can come only when ADX again moves for the upside. The second observation from the charts was a pullback to the 200-day SMA has not taken place. This will be one of the ideal places for me to buy. To sharpen your skills, to get online videos on moving averages, support resistance, ADX, please visit my website stockmarketeducation.net/services. Please refer to my website for standard disclaimer.